traders from across the globe, and welcome to the 1408th edition of Short-Term Trading Live with Oscar Carboni. Good afternoon, good evening, good morning, traders. This video is coming to you on a Wednesday night for trading, Thursday, December 3rd, 2015. As we know, futures trading is extremely risky these days, causes substantial financial loss, is not suitable for all traders. You've got to have risk capital basically to lose these days to play the game. And remember that a stop can be your best friend in this industry while they last. Traders, you know, I have to say for trading on Thursday, it has gotten to the point that I cannot put an arrow up any longer because the OMNI has flipped from red to green and back so many times in the last 10 days. Every day it's a different arrow. So we are going to have a neutral arrow to start off the OMNI in indices for trading on Thursday. We'll take whatever side sets up. Likely the sell side will set up first. We'll see how that goes. The gold hunt remains on. Gold hunt remains on, baby. Gold, we pummeled them today in gold. The gold hunt remains on. Thank the Lord, somehow we didn't get filled in our Nasdaq or S&P buys early enough today, so we canceled them, and we ended up with no trade. We did get trade in the Russell, which we ended up selling out for a loss, but the gold made more than the Russell lost, and point was, thank the Lord, we saved ourselves on Wednesday. For Thursday, the gold hunt remains neutral to start off the indices on Thursday. And remember the longer-term picture, traders. Now, you know we're short-term traders, but I offer you my long-term view from time to time. In about August, I started saying that the markets are getting just a little bit lofty up here, and OMNI's starting to flutter a little bit. About a month ago, I pulled off the words, do not fall in love with the downside, which meant make sure you always buy dips. I took that off the board. That's step one to me starting to realize that this market is definitely getting lofty. Since that day, a month or so ago, I started to tell you traders, look, of course we're buying and selling as day traders during each trading day, but if we fail to make new highs on the next push up, this market is in some trouble. Well, so far, I am here to say we are failing, and we certainly failed on Wednesday to make a new high when the opportunity was presented. Aunt Janet came out. She had no oomph for the market at all. Janet Yellen spoke today, and the market tumbled. Now, granted, news came out that there was some sort of possible terrorist activity in the United States, but I don't think that's what started the down move because it started before that news came out. So Aunt Janet Yellen had absolutely no gusto for the markets today. Now that, traders, is slightly different, right? If you recall from the last year when that woman came out, I don't care what was going on, up was the next move. This meeting wasn't a Fed meeting, but she answered questions and gave a speech. She could not get the markets to go higher, and in fact, they started to trade lower, which brings us back to we so far have failed to make new highs. You take my videos back to 2007 and you will find the same guy that's in front of you now through the whole beginning of 2007 going, hey, this market's going gangbusters higher. And by August, September, I was saying there's a problem with the markets. And by the end of the year, I was calling for the markets to crash. That is what came to be in 2008. Right now, I am telling you, don't fall in love with the downside. Came off the board. Step one. We are failing to make new highs, and unless and until we do, step two is now starting to show up. So let's see what's going to happen. I am not saying the market's getting ready to crash with day traders. We will start off neutral and possibly selling the market tomorrow in the emini S&P. But I am reminding you about the longer-term picture. So far, we have failed to make a new high. We could, but we didn't on Thursday. Coincides with what was in this box. Keep this in mind, longer-term picture. For short-term trading, we're selling gold on Thursday. We might be selling indices on Thursday if they set up. We will see how that goes. With no further ado, come join me at my site live with Oscar.com in the free trading room, and let's go look at some charts. Okay, traders, the emini S&P daily bar chart. the same bar chart that I was showing you for a while now. We've been inside of this F flag just running up and down, and Omni's been flipping buy, sell all the way through it. The F flag was about like this, to be honest with you. That was the bottom of it. We only had a one-day breakthrough. Now that we've got another breakthrough, you've got to take this line, it doesn't exist, and drop it down here. Did the flag simply just expand? Is that what happened on Wednesday? Maybe. Should I go neutral? At this point, yes. Let's let this thing decide, because Omni's been a buyer, seller, seller, buyer all the way through this. It's been very difficult with the Omni flipping every day. Have we just expanded the flag a little wider? Is that all that happened? And are we still going to head back up? Or is this an outside day, which is what it does look like on a daily bar, a prelude to the lower side? We're starting off neutral. We'll let the markets tell us what to do. In the meanwhile, we will go trade something else. The gold. Traders, a round of applause for the fantastic Omni analysis all year long in gold. My goodness. Omni has been all over the gold market. Once again, I gave you a short yesterday. I told you we were selling this thing right about here. That's where it got to and dumped all the way down to here. Omni is still in sell mode. We are selling the rallies again, expecting for more downward movement on Thursday. This is the weekly of the very same chart. Not only is the weekly looking bearish again, but now you've got an F flag on the weekly. See it? So you've got an F flag on the weekly. You've got absolute channel on the daily. The gold looks like it wants to continue lower. The gold hunt remains on with the red Omni for trading on Thursday. Okay, traders, so there you have it, my technical argument for why we're starting off with a neutral Omni in the emini S&P, Nasdaq, you name it, why we are keeping the hunt on in the gold market. And remember the long-term picture here, traders. If we don't make a new high soon, you're going to be sorry, if you're long anyway. For now, we'll let the bull market do its job, but it needs to make a new high. The platinum gold spread, April, we talked about last week at 230, has moved down to 220 as of today's settlement, $10. We expect it to drop at least to 200, if not lower. The spread is working so far. And traders, let me speak to some of you who were writing comments to my YouTube video today about stops. I get it that you're told by your clearing firms that, oh, don't worry if the exchange does no longer accept stops. We'll keep them for you at our level, at the clearing firm level, and we'll just simply match them up. When did the futures become the forex exchange? What you don't realize, you guys that are writing to me, which is why I said, obviously, you don't have a lot of trading history. I have been around 35 years. I have watched clearing firms come and go. Some of the biggest in the world, Enron, the biggest trading industry, the biggest energies trading company in the world, blow out. I've seen Refco blow out. We've seen all the big ones blow out, right? What you don't realize when you're arguing with me, the point that your pretty little clearing firm's going to hold your stops for you, is that when the shit hits the fan, they cannot afford to cross all that stuff and absorb what happens next. They have to pipe it out to the exchange. The exchange can never handle that much volume at once because the orders aren't being transmitted to the exchange like they are now. Don't you people get this? I don't care about your 2 weeks experience in this market and you're going to tell me how this works? Really? I've been doing this a long ass time and I am telling you, if you think that putting your money in the mercy of the clearing firm's stability instead of into the exchange's stability, you are absolutely incorrect about your theory. Whether your clearing firm is going to hold your stops for you or not, if they are not at the exchange, when the shit hits the fan, so will your account. I assure you that's how it's going to work. The forex firms hold all the orders, and they try to cross the buys against the sells and try to fill the orders that don't match up. What happened to what's it, FCXM? FXCM? You remember those guys? Yes. What happened to them? That is exactly what each and every clearing firm will turn into, like a forex firm, that they're actually not sending orders to an exchange and trying to match them winners to losers. I kid you not. that's a recipe for disaster. What you're saying is that you believe in your clearing firm and that it is stronger than an entire exchange. Get it? It's no good that your clearing firm says, I'll hold the stops for you. They can't afford the mess that's going to come when the market does something dramatic. Remember, it only took a one-day spurt for many FCM firms to go under, and the biggest one went under that I just mentioned to you, and we had a one-day spurt in the Swiss franc to the upside, and boom, these guys were dropping like flies. Almost the biggest one went down. What do you think happens to these clearing firms around the country when they're stuck holding stops and we have some sort of a flash crash? I kid you not, this is a bad recipe. They shouldn't stop the exchanges. The exchanges should not stop taking stops, because all they're doing is passing the buck to a clearing firm which has way less money than an exchange. And that's where your money will sit. So whether or not you think I'm right, I've been doing this for too long, I assure you people, I know exactly what I am telling you. Your clearing firms, when the crap hits the fan, cannot handle the amount of volume that will go through them. So we will be left with something interesting, but if you do set alerts, if you do stay alert, if you do get yourself out when you're supposed to, you'll survive most of the ugly moves with or without a stop. It requires a great deal of discipline. I teach discipline every day at the OMNI Trading Academy. I will teach discipline to you, what to do when you should get out, where to put the stop when they allow you to put the stop, and how to behave when the market's coming after you. I will teach that to you here in Las Vegas at my Omni Camp. I'm having a 4-day seminar called Omni Camp, January 22nd through the 25th. I will teach you how to behave when the event comes in Jan 26th and Feb 26th, 2016, when they stop accepting stops. You want to learn how to behave without stops? Come to my Omni Camp, Jan 22nd through 25th. You will be armed with what you will need to get through the gauntlet. Traders, that's about it. I'll see you all at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to try to keep your emotions at bay while they'll let us is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll. I'll see you all at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.